Hey guys, do subscribe to the channel if you find our content useful so that we can keep putting out free resources for the underprivileged. Now, in this video, we're going to be looking at how investment activities go on and affect the financial statements. So taking from our previous example, let's presume that you've got a pizza shop, but this time you need a loan of $100 to either expand your business enterprise or to put out in terms of promoting and marketing your business. So the first thing you could do is go to a bank and ask for a loan for $100. Now in this instance, your net borrowings on your cash flow statement would increase by $100 because what net borrowings is the amount you've borrowed, any new borrowings in that period, minus any repayments you've made. So let's presume there's no repayments, so your net borrowing goes up by $100. Now let's presume that the bank has agreed to pay you $100 and you have to pay it back in 10 years. Now once the bank has cleared or green lighted your loan, what that means is you've got an extra $100 coming into the cash section of your balance sheet. Remember, this section is like your wallet, so you've got the $100 coming from the bank straight to your wallet. This also means there's going to be a $100 increase in your long-term debt. Now keep in mind, the bank has agreed for you to pay the loan back in 10 years, so there's going to be nothing in terms of current portion of debt, which is debt that has to be paid out in the next 12 months. Now let's presume you need an additional $100 for employing new staff. You can't go to the bank because the bank has already fronted your loan, so your next best option is to sell stocks. Now when you sell a stock, what happens is you sell an ownership in your business in exchange for cash. So let's presume you had to sell 5 stocks to get the $100. Your sale of capital stock on your cash flow statement increases by 5 because you've sold 5 capital stocks in order for you to be able to get that extra $100. Now once you've sold the stock, so an investor's bought the 5 stocks, again your cash section would have an increase of $100. Now keep in mind, I've put plus 5 here so you don't get confused. Plus 5 is the stock that you've sold, and in your cash you're going to have an extra $100 coming in, so you would have $200. The next thing is your capital stock increases by 5 shares as well.